Hey everyone, George here. So if you're new to the channel, we talk all things accounting for contractors here. And this one I want to discuss today is a new requirement, new thing coming out for the 2025 tax year, and it's the 1099 DA, which stands for digital assets. And this is something that you're going to expect in January 2026 if you accept crypto as a payment method, if you have any investments in crypto, if you trade crypto, anything like that. So we're going to talk about this big change, why it matters, what gets reported, and practical takeaways for you as a contractor. So, let's get started. So you might be thinking, George, I'm building houses, not trading, Bitcoin. Why should I care? So here's when and why it could matter for you. Number one, if you're accepting crypto payments for jobs. Number two, if you're investing any profits in cryptos, if you have any crypto or NFT investments. Or number three, if your subs are using crypto payment processors, this would all be applicable to you. So what is the Form 1099 DA that's going to be coming out in January 2026? So this is the IRS's new 1099 for digital assets, sales, and exchanges. And it applies to any custodial crypto platforms like Coinbase, Binance, BitPay, or hosted wallets. And they're required to basically issue this form for their users. So what gets reported? The custodial platforms must report name, address, and taxpayer ID for the taxpayer. That is you. What crypto you sold, how many units you sold, the sale date, gross proceeds, and whether you sold it for cash, another crypto, services, stored value cards, or property. And the real big kicker is starting in 2026, they're required to report your cost basis as well. That is what you originally paid for that crypto. So what are the things that trigger a 1099 DA to be reported for you? Number one, selling crypto for cash. That's pretty straightforward. If you sell, for example, Bitcoin on one of the exchanges, that gets reported and that would trigger a 1099 DA. Number two, using crypto to pay for goods or services. This is what could matter to you as a contractor. If somebody pays you in crypto and the processor is custodial, that would get reported and trigger a 1099 DA. Even routine purchases through a payment processor like BitPay get reported if they're over $600 a year. Number three, trading crypto for other crypto. So if you say, for example, trade Bitcoin for Ether, that's technically considered a taxable event and that would trigger a 1099 DA. Number four, using crypto to buy real estate. So real estate brokers are getting pulled in here too. Number five, selling NFT. So if the NFT that you sold is over $600, that would get reported and trigger a 1099 DA as well. Transactions that are not reported that are exempt for 2025 are wrapping, unwrapping, liquidity provider transactions, staking, certain lending transactions, short sales, and notional principal contracts. If you're not involved in any of that, there's nothing to worry about. So I just thought I'd throw it out there. So another big change is that FIFO is now considered the default, and that is first in, first out. So they consider the sale of any crypto that you have as being the first one that you had bought of that type. And this would usually result in a higher taxable gain. Now you can get around that by telling your broker on the method that you want to be selected. In 2025, they're allowing you to do it after the fact. However, starting in 2026, you have to do it prior to the time of sale. Also, another thing that results from this is that each wallet is treated separately. You can't treat all your crypto across wallets globally, for allocation purposes. So it's more structured in that way, like going forward. So what are some practical takeaways from this new tax change? So number one, if you use crypto in buying and selling, you should track everything, and you are going to get a 1099 DA. So as much as you track, there's going to be a very solid form that tells you what your net taxable gain is or loss is going to be. And be aware that that's coming out in January. So that's something you're going to have to provide to your CPA as well. Number two, if you invest in crypto, choose your accounting method now. So if you are on a FIFO method, you are going to pay the highest taxable gain. But if you go into your brokerage account and change the accounting method, that could potentially, put you at an easier taxable gain for now. But that would defer a lot of the gain. So the higher taxable gain you'd potentially pay later. If you use multiple exchanges, just know that each one is going to issue its own 1099 DA. So you can't, lump everything into one bucket anymore. And number four, talk to your CPA. If you have significant holdings or if you do significant transactions with crypto, it's something that you might want to bring up with your CPA and do some planning around. So I hope you found this helpful. Click like, subscribe, turn on notifications for any updates, and hope to see you in the next one.